Hey everyone, we're going to take a look at how to create the statement of retained earnings. So as always, we're going to download our data. You can see I've already done that already. So they provide a partial income statement and two partial balance sheets. Step one is to complete the income statement. So if we recall from our income statements, first thing we need to figure out is our earnings before taxes. Then our interest expense, taxable income, tax, and finally our net income. So earnings before income tax is going to be our revenues minus our expenses. And in terms of our interest expense, that is actually provided for us, okay? So in this case, it looks like it's $18,200 for 2017. Our taxable income is going to be the difference between our EBIT minus our interest expense. In terms of what our tax is, in this case, they give us the tax rate, so we can go ahead and apply that tax rate to our taxable income, which is 40%. And finally, we'll be left with our income tax after taxes, or our net income. So that is the completion of the income statement. Let's take a look at completing the balance sheet. So in terms of completing the balance sheet, we have to remember the sort of the accounting identity, which is that assets, so total assets, is equal to our total liabilities plus owner's equity. Okay. So we can go ahead and add up all of our assets on 2016. So we're going to add all of our current assets. Now in terms of our fixed assets, we're going to go ahead and add. But remember, accumulated depreciation is a negative value. Okay, so we have to subtract that. That's important to remember. And then finally, we can add our intangible assets. So that gives us our total assets, and that should be equal to our total liabilities and owner's equity. So in order to figure out our retained earnings, we're going to subtract from our total, subtract the common stock, subtract our liabilities, and that should give us our retained earnings. So finally, just to clarify, we should add these all up. We're going to add our liabilities and our equity, and we should have a balance, and it looks like we do. So now we can move on to 2017. One thing you'll notice in 2017 is they did not give us the value for accumulated depreciation. So we're going to have to figure that out. Well, we know 2016 accumulated depreciation. So we just need to add up the depreciation of this year, 2017, and that will give us our accumulated depreciation for 2017. So that's done. And we're going to go ahead and do the same and complete the balance sheet like we did in 2017. So again, we need to add up our assets. Okay, remember to subtract the accumulated depreciation. And in this, now we can figure out our retained earnings. And what we really want to figure out for the retained earnings statement is, well, our retained earnings. So this is going to help us have those values. Once we complete the balance sheet, we're going to have an excellent opportunity to complete the statement of retained earnings. Okay, wonderful. So we do have it balanced. So now that we've completed both the income and the balance sheet, we just need a few equations and we can go ahead and figure out our statement of retained earnings. So in this, the first part is to figure out the distributed earnings. So this is also otherwise known as our dividends. Okay, in order to figure that out, again, if we take a look at our readings, a reminder for the formula, okay? before we actually figure out distributed earnings, we need to figure out our retained earnings or a change in retained earnings. So our change in retained earnings, okay, is this going to be the difference, okay, from the ending and opening of our retained earnings. So in this case, it's going to be the difference between our 2017 and our 2016, okay. So now that we have the change in retained earnings, we can go ahead and figure out our distributed earnings. So distributed earnings, we need to know two things. We need to know our net income, and we need to know the change in retained earnings. So we figured out the net income in our balance sheet. Okay, so it's going to be net income minus the change in retained earnings, which we figured out here. So those are the dividends that will be paid out. So let's see if we input that here. Hopefully we get an encouraging response. Oh, that's very nice of us, nice of them. So as you can see here now, we have the opportunity to complete the statement of retained earnings. So for our beginning balance, that's going to be the opening balance. So in this case, our retained earnings opening balance was from 2016. Okay. Then we need to add our net income, which we've figured out again from the income statement. And finally, we're going to subtract our distributed earnings or our dividends. Okay. So again, if we go ahead and do the math here, okay, let's make it a little bit clearer from the Excel sheet. Okay, so basically, remember our beginning balance, okay, retained earnings, our net income from our income statement, and then finally our dividends are distributed earnings. So that's going to give us our ending balance. So again, we're going to add our income and we're going to subtract our dividends. So that should be our ending balance. Let's take a look here. Excellent. So we've completed the statement of retained earnings. Remember, you need to complete the income statement and balance sheets first, and then follow a few formulas, and you're good to go. Happy financing!